Hey, Saretsky here. As always, Canadian real estate market update, particular focus on Vancouver. If you're getting sort of value or intimidation out of these videos, all I ask you to thumbs up and subscribe. Questions, comments, put those below. I wanted to put one last video together to round out the year. So we'll skip next week and we'll reconvene here for the regular weekly show in January. We wanted to get some detailed thoughts out, kind of what I'm looking at as we head into the year of this end of this year and into 2023, getting a lot of media requests for sort of the 2023 outlook, and so I'll kind of give you a bit of my thoughts on that. But I think we kind of have to open this up and start with some numbers coming out from Stats Canada covering the population growth here in Canada. So the story this year has really been about interest rates. 400 basis points tightening from the Bank of Canada, the fastest rate hiking cycle, I think, over the last 30 years. So that's been getting most of the headlines, as it should. But behind the scenes, there's a lot still happening, which is we pulled in 865,000 new people into this country. That's the fastest pace of growth in 50 years. And over the past quarter, we added 362,000 people. That's equivalent to 0.9% of the population, the fastest quarterly gain since 1957. Of course, when the country was in the midst of the baby boom and welcoming refugees from the Hungarian Revolution. So this is really what's interesting. That's kind of happening in behind the scenes, because we talked about this on the Looney Hour, which is population growth can continue to paper over a lot of the economic problems that you have, right? The lack of productivity, the economic contraction that we're surely going to have in 2023. But if you continue to add more people, it kind of papers that over. And I think that's kind of what it's doing, to the housing market. Again, no question that it provides a floor or a support for the housing market to some capacity, whether that's in the rental market or that's in the resale market. The reality is the rental market, or the yields that you generate from the rental market, is an underlying support for, say, investors that are purchasing end units. If the rents are continuing to go up, that basically increases the cap rate and makes the investment more attractive. Of course, the reality is that today, interest rates continue to dwarf the prices that are, and the affordability, and that is going to dwarf what's happening on the population side over the next 12 months. So what matters here and now is, in fact, interest rates and not population. But I'm going to get to that in just a second, because what's interesting about out of all of this is we finally had some updates from the federal government on their 2-year foreign buyer ban here in Canada. So you'll remember they announced this, I think, 6, 7, 8 months ago in the summer, and this ban is coming into place as of January 1st, but they didn't actually have any details until just this week. So 2 weeks before the ban gets implemented, the government's finally come out with sort of the fine print, which is classic government policy, right? I mean, you basically leave it at the last minute and try to figure it out. So this ad hoc policy measures. But basically what they did was they exempted foreign workers and foreign students, which of course make up roughly 2/3 of the recent population growth of over 800,000 people. So this is how I would sort of explain it to you. The economic policy, whether you like it or dislike it, is irrelevant. The economic policy in Canada under this level of government is import as many people as possible, and basically sell them housing. Build housing for these people and sell it to them. That is the economic policy. So it makes sense if you're going to say, hey, everyone come into our country, 800,000 plus people, and then tell them that they can't buy real estate. It's not very welcoming. So this is the government's basic policy. So I always say, the government says, well, we want affordable housing. Well, do you really want affordable housing? Because we do have to talk about importing 800,000 people when clearly the infrastructure doesn't support that, or struggling to support that, and housing starts and new housing is going to struggle to keep up with that level of growth. And the big thing that I would like to point you to here, and this is sort of, again, the bigger picture macro. Like I said, what matters in the next 12 months is interest rates, which we're going to get into. But on the bigger picture is, we're still talking about, okay, we're importing all these people. Are we going to be able to build enough housing for them? Well, rents can actually stabilize as well as with prices. And so one of the things I'm looking for is, well, we've got this big drop off in prices, right? Nationally, house prices are down 16.5% since peaking earlier this year. That's the steepest correction since the index was created in 2005. So developers are saying, well, I don't really want to take any risk right now. The cost of construction is still elevated. The cost of financing this construction is up, significantly, and the demand is waning. Right, nationally, in the month of November, home sales across the nation were at levels last seen in November of 2008, just after the onset of the global financial crisis. So developers are saying, well, I don't really want to take the risk. So all you have to do is look at residential building permits, and you can see that they are rolling over, and rather significantly. So this is basically developers' intentions of building, right? Like housing starts, while they may still be relatively elevated, it's because they've already spent all the money. Once you get to basically, you've got your permit in place, you almost, in most developers' cases, they have to move forward with the project. They have to try to build because they've spent years going for a permit, spending all this money on due diligence and lobbying, sitting, and architectural plans, et cetera, et cetera. So once you get to that stage, you basically you're almost forced to put your shovel into the ground, despite the housing market's conditions. So residential permits are that leading indicator. In fact, if you were to look at some of the large macro shops out there that provide research, one of the sort of models that they'll tend to use as like a forward indicator for where they see economic growth in the next 6 to 12 months is a lot of them will actually use residential building permits as a leading indicator for where the economy is going. So it's important to watch residential permits, to get a sense of where Canada, I think, is going in 2023. And clearly residential permits are rolling over. And when housing makes up such a large segment of not only household wealth, but of economic growth, I mean, it's about 20% of GDP in this country, give or take, that it clearly, when that segment starts to roll over, it is a matter of time until that trickles through into the rest of the market. So that's kind of what I'm looking at in that segment. But the reality is some of these media people are asking me is, okay, well, what is the outlook for 2023? Are we going to find bottom? When is the bottom? And again, I'm not going to crystal ball and tell you that I have the answer, but so long as rates stay where they are with a 5 handle in front of them, the housing market's going to struggle, and I think there's more downwards pressure on prices. So all you have to do is look at RBC's affordability index, and shows that this is the worst levels of affordability going back to the early 1980s when RBC started tracking this data set. And so the market is going to struggle with that. There's a good note here from my good friend Ben Rabideau, who runs Edge Analytics, a research firm for the housing market. So per his own calculations, at today's prices on a national level, just under the monthly payment would roughly be about $3,300. That's up about 43% from a year ago. So affordability conditions have deteriorated. Yes, prices have come down, but they have not come down enough to actually offset the increase in interest costs. So for the typical home buyer that's out there active in the market today, the housing market actually hasn't gotten any more affordable. Yes, again, the prices have come down, but your monthly payment is higher. So long as that remains the case, I think it's logical to say, okay, there's probably a little bit more downwards pressure on prices in the near term. And so that's kind of my view. Now, the real question mark is what's going to happen with interest rates. I personally think that there's going to be an opportunity for people, for example, those that run variable mortgages, to lock in at these fixed rates that are going to be, I think, quite a bit lower in Q2, Q3, maybe Q4 of next year, as the economy, I think, undoubtedly enters a slowdown and likely recession on the wall. That bond yields are going to come lower, and that's going to provide a relief valve for those that then want to basically pivot into your fixed term lock in. Because I think there's still a decent probability that you will get that double top in inflation in maybe 2024. But I do think that what's going to happen is central banks, I think, have over tightened, particularly here in Canada, right? Up 400 basis points. Keep in mind, it takes on average at least 12 months for rate hikes to work their way through the real economy. So while yes, they've hit housing, they hasn't actually filtered through to the rest of the economy. Remember, the Bank of Canada was still hiking rates here in the month of December, so we haven't felt, probably the last 150 to 200 basis points of tightening into the real economy, and so I think that is still to come. So that's kind of what I'm looking at. I think the big overarching story here again is that interest rates are going to continue to dampen housing affordability and prices. I think prices still need to adjust lower, given where the level of interest rates are. Until that happens, housing sales and demand is going to be weak. I don't think it's going to be as weak as it is right now, given where sales volumes are running at basically 2008 level crisis levels. I think sales volumes are going to increase, but they're going to remain well below 10-year averages. So sales will almost certainly increase in 2023, but I think prices will also still be declining until you get a change in interest rate policy. Now, again, it just comes down to also is how large is this recession, how deep is it, how many job layoffs are we going to get. I still think the labor market is tight. One thing to keep in mind is that of these 800,000 people that are coming into the country, a lot of them are, again, temporary workers that come here because the labor market is extremely tight. We need to bring them in, and there's jobs for these people. But if you do get a decent size, a big enough recession where you get job losses, which is what the Bank of Canada has come out and told you they want, if you do get job losses, then I think the temporary workers, some of them will actually pack their bags and head home. So the level of people coming into the country, 800,000 plus over the past 12 months, not sustainable. It won't hold up. But the fact is the Canadian government is still targeting close to 500,000 permanent residents that they want. Permanent residents, not temporary residents, temporary workers, temporary students. They want 500,000 PRs per year over the next 2 to 3 years. So that is going to be the problem down the road as building permits roll over here and new housing starts and construction rolls over. I think we'll still be talking about housing issues and housing lack of affordability 5 years from now. So I hope that helped. We made lots to chat about in 2023. It's going to be a volatile housing market. Different areas are going to perform differently than others. We've talked about outperformance in certain provinces before. So hope you continue to tune in. Appreciate your support this year. Merry Christmas, Happy New Year, and we'll see you in January.